Hi, this is Mark with your analysis for the week commencing the 17th of April. In last week's update, on the Friday, the candle had closed up here at 88.38, and I'd said to you I was looking for a long at a pullback at 8800, which was here, and this was probably the best trade of the week. The euro pound has a much smaller daily range than the pound dollar, and therefore I tend to double my stake on this pair. So that was a good example of looking for a pullback. We're in an upwards trend, and therefore we only wanted to go long. Members of my mentor group, Forex Mentor Pro, were able during the week to have a second bite at this cherry, because what I explained during the week here on the Wednesday, I said look for a potential pullback again to 88.20 area. And the reason is, you can clearly see here, this is the trend I was talking to. This is a channel, and we're in a clear uptrend on this pair, and this goes back to the beginning of February. So each time that price has come back down to this trend line, it has moved back away. I then looked for multiple reasons. I also had the intersection of a weekly trend line, and we had the 50% fib in the same area. So at the moment for me, I am only interested to long this pair. This is the same pair back on the chart with all the EAs, etc. The only concern I have with lots of the pairs at the moment, we have stochastics are starting to roll over, and we have what's known as MACD divergence, and there is a description of MACD divergence in the site. But basically what it means is you see here how price is going down on MACD whilst it's clearly going up on the actual chart. So how do you play it? Well, 8800 is the first area. If it was to break this area, then counter trend traders would look for a pullback to 8800 with a view to a short. Personally, I would rather wait for a pullback with a view to a long again at 8720 because we're still in this trend. So what you may get, price may spike down to the area before then moving away. Best way to play this is on a 4-hour chart and see what happens and react accordingly. This is the euro yen, and in recent weeks we've shown how we've had this major breakout, triangle breakout. We've had a 5-8 cross. We had monthly MACD divergence, and I just explained to you how that works, and it did give a clue for many months that price was likely to change, and it has done. Last week I said I was looking for a long at 119.65 was my preferred area. Thursday this came down and bounced off for 130, 140 pips. This is still the crucial area for me. Once again, we are in a clear uptrend, but once again, we have stochastics rolling over. We've just had a 5-8 cross on the daily. On the weekly, we've almost got Tramtrex, whereby it's a clue that price is going to turn over, and we're outside the weekly Bollinger Band, so it does suggest it's going to go down. Watch the euro yen Bollingers at market open. If this one was to close on the weekly, then it would give me far more belief that this is going to go down. If, and again, if it does, watch this upper one here. If you were going to play this counter trend, once again, you would wait for price to break and close below 119.60, pull back up to the area with a view to a short. Once again, I am only interested to long, and the best area of all, if it was to get all the way down to 115.50, would be my preferred entry. This is the Aussie dollar yen, and this is on a monthly. And notice how this trend line, this resistance area we've had in here for months, and price slammed through it, pierced it, and then stopped just below it again on Friday. This is 61.8 fib of a monthly move. Huge area here. Looking on the daily chart, we had the breakout up above here last week, and then price came back down, and price has been bouncing off 8700 really, 86.95. 8800 and 87 to me are the crucial areas. If you are looking for a long, you wait for price to break up above the 8800 pullback and the view to a long. Similarly, if it came down here and you only want to long, that will be the area to long. If you wish to think in terms of counter trend, you would wait for a break below here and the pullback and a move away. So the bottom line of all of this is you need to first identify the major area of support and resistance, and then watch as price gets to that area to see what's going to happen. And if you want to do it where you're going to trade on a daily, then wait for the candle to close, then make your decision. The Aussie dollar. Now, Aussie dollar last week was up here, and I said I wouldn't want to take this because this was at an extreme high, and I would only be interested in the pullback. And the pullback area I was looking for was 1.041. Now on a 4-hour chart, let's have a look here. On a 4-hour chart, price did in the middle of the night in a nation session one night, news related, spiked through this area of 141.58, but it then came back later in the week and then bounced and moved away. Now again, we are within two areas of support and resistance here. We've got this area and this. If I was wanting to go long, I would want price to break and close above this area here with a view for a pullback, or back down here again you would look for price to come to this area. Once more, counter trend traders would look to go here or here for shorts. If I do take counter trend trades, which is rare, I always halve my usual stake. If you are selling whilst everyone else is buying, then it is a dangerous position to take. The pound dollar. Now the pound dollar has been messy, and I said last week it was messy. The upper support resistance area is 164.25 up here. Price bounced off it last week. The lower support area, the major area I would really like to long from, is 160 if it was to get all the way back down here. If it was to break through here, I would still leave alone because I don't like the 200 in the way. This is why I am wary with this pair. This is a flag pattern, and this is a trend line we have had on here going back months and months and months. This is the weekly pound chart, and you can see here how clearly price keeps coming up to this line, and we're moving up gradually, but it keeps coming up, hitting it and bouncing off it. If you were going to go long, you would want it to break and close above the 64.20 and then get above that 200 EMA. I'm saying to you, the ideal is 160. And we were even talking in terms of this cross here. This cross here is the first time it's happened for 2 years. And last time it happened, the move, I believe, was 6,000 pips. So if price was to come all the way back down here on a weekly move, then that really would support my theory of 160. So 160 is my main preferred area for a long. If you are interested on a breakout, as I say, it needs to get up above that 164.20 area. And alternatively, you then look for a pullback and a breakout. Counter trend traders, again, will be interested. The stocks are rolling over, potential 5-8 rollover, but this is the crucial area. Wait for it to do what it's going to do and make your decision. Euro USD went absolutely nowhere last week. I think it did about 30 pips in the end from open to close. This is a spinning top, and this is a sign of major indecision. After a major move, this is quite normal. The markets are deciding where it's going to go next, and here we have it on a daily chart. Once again, watch the Bollinger Band on the daily at market open. If it was to close down, it would give you support to the theory that this is going to go down. Where would be the next area in an uptrend that you would want to look to long? Then 14300 is the major place. This is the dollar yen, and the area I identified last week was here, 84.73, major support and resistance going back years. And what I'd said is that if I was going to long, I needed a candle to break and close above 84.73 before taking it. Hopefully that kept you out of a losing trade. And what did it do? Well, here, crucial bit of information here. This is an engulfing candle. The whole of this candle body is engulfing the previous weeks, and this does suggest that we're now on for a down move. The way to play this would have been during the week. We had the break below 84.73. The next candle came up and touched it, and then it fell away. Now, where would you go to take this again? Best place probably is to look on a 4-hour chart. On a 4-hour chart here, you can see how price has come down and repeatedly bounced off this 200 EMA, which also happens to be 8300. So if you are looking for a short, the way I would look at this is break and close below. I'd rather look at this lower area here of 82.90. So I need a break and close below 82.90 for a passable short. Bear in mind, it may only get down here 82.40. If it was to pull back and bounce back up here, then at 8400 we have got these EMAs, 8370 area rolling over, stochastics rolling over, etc. I'm only interested to short this at the moment. Those would be the areas, breakout, pullback, or a pullback all the way back up here. The Swissy, and last week we were looking for a potential pullback here up to 9150 area, I believe it was. Didn't quite get there, and then promptly fell a few hundred pips. Again, we're in a long-term downtrend here. The only thing I am interested in is to short, and the ways to play this are you could look for a potential pullback here to 90, 89.66 here, anywhere from between 89.60 and 90 will be the areas. You can see how price stopped here twice, 3 times during the week. It was a previous low. As I say, we are in a long-term downtrend. Watch the Bollinger again at market open. If it stays open, it suggests it's going to keep going. But first area of potential short, preferred area of potential short up here. Finally, the CAD. Last week we were looking for, I said 96.20 or 96.80 would be my preferred area, and it got up to 96.70. And I know some of you in the members area caught this one. Again, this has been falling like a knife for years, and the only way I'm interested in trading this is a short, and the only way I'd be interested is I need a pullback once again. And the logical first area once again is 96.20. And thereafter, what we can do here is put in a trend line. And if we start looking here, then that would support the theory of possibly all the way back up to 96.50. Price came up, bounced off the area on numerous occasions. So once again, pullback with a view to a short is what we are looking for. I'll update you during the week. This is, of course, Easter weekend coming up. This weekend just gone, we've had IMF meetings and G7. So there's a chance of some kind of bounce at the market open on any pair, and I wouldn't be surprised if people are trying to talk the dollar back up to weaken their own currencies. And it is Easter at the end of the week. My plan is to try to make my target as early in the week as possible, and Monday is a fairly light scheduled news day. So Monday, Tuesday would be my preferred days. I will update you in the members area tomorrow. Have a great week.